Welcome to Financial Freedom FX. In today's video, we're going to dive deep into the EUR/USD monthly chart, analysing every critical detail you need to know before making your next trading decision. We'll break down the major support and resistance zones, discuss the highlighted supply and demand areas, and explain how the market structure, with higher highs, higher lows, lower highs, and lower lows, is shaping the future trend of this currency pair. If you truly want to understand where EUR/USD could be heading next, stay tuned till the end of this video, because we'll uncover key levels that could define the market's next big move. The EUR/USD monthly chart is showing a significant shift in market structure, with price currently trading around 1.1578 after a powerful bullish breakout. Over the past few years, the pair has moved through a clear cycle of lower highs and lower lows, reflecting a prolonged bearish trend from the 2018 highs near 1.25. However, the recent surge above the 1.10 zone, which previously acted as a strong resistance, signals a potential trend reversal. The highlighted purple zones represent major areas of supply and demand, where price has historically shown strong reactions. The most important resistance zone lies between 1.23 and 1.25, which previously capped bullish moves in both 2018 and 2021. If the current momentum continues, this area will be the key upside target for buyers in the coming months. On the downside, the nearest support lies around 1.10 to 1.12, which now acts as a retest zone after the breakout. A deeper support is marked around 1.0389, a level that has been tested multiple times since 2022 and has consistently triggered bullish rebounds. The historical low zone around 0.9535 to 0.9527 remains the ultimate demand area, representing the bottom of the multi-year downtrend. The price structure on the chart shows higher lows, HL, forming from 2023 onward, which suggests that buyers are gradually gaining control after years of selling pressure. The most recent breakout above the red-dotted resistance line near 1.15 confirms strong bullish interest, and the market could attempt to form a new higher high if this momentum continues. The chart clearly displays the pattern of higher highs, HH, and higher lows, HL, during bullish periods and lower highs, LH, and lower lows, LL, during bearish cycles. For example, the 2018 peak around 1.25 marked a higher high, but the subsequent failure to hold above 1.20 led to a series of lower highs into 2022, pushing the price all the way down to the 0.95 area. The highlighted zones also show where institutional players have entered the market in the past, providing valuable insight into potential reversal points. Currently, the breakout from the mid-level resistance near 1.10 suggests that the trend is shifting upward, and buyers will likely aim for the 1.18 to 1.20 range before testing the 1.23 major resistance. If EUR/USD holds above 1.10 in the coming months, it will confirm a strong bullish base, potentially paving the way for a retest of the 1.23 zone. However, if price drops back below 1.10, it could signal a deeper correction, with 1.0389 acting as a crucial support. The long-term chart structure highlights the importance of these key levels, as each breakout or breakdown has historically led to significant directional moves. The current price action suggests that the bulls are in control, and as long as the higher-low structure remains intact, the overall outlook will stay positive. The EUR/USD weekly chart is currently displaying a strong bullish move, with price trading around 1.1581 after breaking through key resistance zones. This breakout is significant as it comes after months of sideways consolidation and multiple tests of lower levels. On this chart, the purple highlighted zones represent the major supply and demand areas where price has historically shown strong reversals. The nearest and most important resistance lies around 1.2315, a level that has acted as a strong ceiling during both 2018 and 2021. If the bullish momentum continues, this will be the next major target for buyers. On the support side, the 1.0330 level stands out as a strong demand zone. This area was heavily tested during the 2022 and 2023 price action, where buyers stepped in to prevent further declines. Another crucial level is the 0.9553 to 0.9535 zone, which marks the extreme low of this downtrend cycle and represents a multi-year bottom. As long as price stays above 1.0330, the overall structure favors the bulls, with higher lows forming and pushing the pair toward higher levels. The weekly chart also highlights a breakout from the mid-level consolidation range near 1.10 to 1.12. This zone acted as a stubborn resistance for months, but is now likely to serve as support during any pullback. The price action suggests that buyers are taking control, with the recent bullish candles showing strong upward momentum and little sign of selling pressure. If this rally sustains, EUR USD could continue trending toward 1.18 and eventually test the 1.23 zone, which aligns with the next supply area on the chart. The key takeaway here is that the market structure has shifted from a series of lower highs and lower lows to a more bullish pattern. The long-term downtrend that started in 2018 seems to have found a bottom near 0.95, and the current breakout could be the beginning of a larger bullish cycle. Traders will need to closely watch the reaction near 1.15 to 1.18 to determine if the bullish trend will remain intact. The EUR USD daily chart is currently trading near 1.1585, showing signs of a recent strong bullish breakout followed by a slight retracement. This daily structure reflects the continuation of the upward momentum observed on higher timeframes, weekly and monthly, confirming that buyers are still dominant in the market. The price recently broke above the mid-range resistance zone around 1.12 to 1.13, which is now likely to act as a fresh support during pullbacks. The sharp rally that started from the 1.0330 area shows a strong bullish impulse, with very little selling pressure seen during the climb. Looking at the highlighted purple zones, we can see the key supply and demand areas. The 1.2315-1.2476 zone above is the next major resistance area, aligning with historical turning points where sellers have stepped in during past rallies. In the near term, the current bullish trend could aim for levels between 1.18 and 1.20, provided the price stays above the recently broken support. On the downside, the 1.12 to 1.13 zone is the first area to watch for a retest, and below that, the 1.0330 zone remains a critical demand level for medium-term buyers. The daily chart also highlights the bottoming structure formed around 0.9553 to 0.9535 in late 2022. This level marked the end of the prolonged bearish phase and set the stage for the current bullish trend. The steep upward movement since mid-2024 confirms the shift in sentiment, as higher highs and higher lows have consistently formed. The recent consolidation near 1.15 to 1.16 may be a pause before another leg up. In terms of structure, the market has moved from a choppy sideways phase in 2023 to 2024 to a clear breakout rally in 2025. If price maintains support above 1.15, the bullish momentum could continue toward 1.20, 1.23. However, a failure to hold 1.15 would suggest a correction back toward 1.12 or even 1.0330, which would still be healthy in the context of the overall uptrend. The EUR USD H4 chart is currently showing a consolidation phase after a strong bullish rally that pushed price up to the recent high near 1.1830. We can clearly see that the market has started to pull back slightly, but it's still holding above the key mid-range support zone around 1.14 to 1.12. This zone is extremely important because it has acted as a major resistance in the past and has now turned into a support level, indicating that the bullish trend could still continue if buyers step back in. Looking at the structure, the sharp rally from the 1.0330 demand zone earlier this year shows how aggressively the bulls took control of the market. Since then, EUR per USD has been making consistent higher highs and higher lows on the H4 timeframe, which is a clear sign of bullish momentum. However, the current price action is testing the short-term support area around 1.15 to 1.16, and a strong bounce from here could signal another push toward 1.18 to 1.20 levels. On the downside, if this support fails, the next demand zone lies near 1.12 to 1.13, which is still aligned with the overall bullish trend. The purple highlighted areas on the H4 chart indicate key supply and demand zones, where price has historically reversed or consolidated. The upper zone around 1.2315 to 1.2476 remains the major target for buyers in the medium term, while 1.0176 to 1.0330 acts as the critical demand zone that started the current bullish cycle. As long as EUR USD stays above these major levels, the long-term outlook remains bullish, even if we see short-term corrections. So, looking at the overall structure across monthly, weekly, daily, and H4 charts, EUR USD is showing a strong bullish bias, with key levels clearly defined for both buyers and sellers. If you found this analysis helpful and want more detailed breakdowns like this, make sure to hit the like button, subscribe to Financial Freedom FX, and turn on the notification bell so you never miss an update. Drop your thoughts in the comments below. Where do you think euro to US dollar is heading next? See you in the next video.